Um, as I said earlier, my name is Eric Lee, and I'm the Neighborhood Development Officer for the Northeast region of Baltimore City. Kelly Bacala, Neighborhood Development Officer for the Northwest region, and our fabulous admin, Danielle Reynolds, is also on this webinar as the DHCD host. Our Director of Outreach and Marketing is Teresa Stevens. Unfortunately, she wasn't able to be with us today. This webinar workshop is the last workshop for 2021. And we thank you for your interest, your participation, and your commitment to improving the quality of life in Baltimore neighborhoods. Our team at DHCD is already working on a webinar series for 2022, and we welcome your feedback and your suggestions on topics of interest. Our webinar workshop today is a presentation from Sharon Park and her partners that she will introduce to inform and educate us on DASH funding. DASH stands for Developing Affordable Starter Homes. During the presentation, we ask that you type your questions in the chat, as we will facilitate a question and answer session after the presentation. Again, thank you for your participation. And now I'm going to turn the presentation over to Sharon Park, Executive Director of DASH, Developing Affordable Starter Homes. Thank you.
Thank you so much, Eric. We really appreciate the opportunity to participate in this very important series about building Baltimore. Good morning, everyone. My name is Sharon Park, and as Eric mentioned, I'm the Executive Director of DASH. I want to thank all of you for taking the time to join us this morning. It's amazing to see how many participants we have, which really shows us that this fund hopefully is necessary and will do a lot of good together. So we put together some slides, and in terms of agenda, I'll be giving a very brief overview of DASH, some of the mission and goals that we have, as well as introducing you to some of our very important and key partners. Then we'll jump into the nitty-gritty of what the program is about, the loan product, as well as some of helpful hints in terms of getting started if you're interested in participating in the program. And then, as Eric mentioned, we'll wrap up with a Q&A. So please have your questions ready for the chat room. And to the extent we don't get to your questions during the webinar, we're happy to answer any of them by email or by phone. And the email is dashinfo@dashfund.org. I believe that email address is in the chat right now. So with that, let's get started. So what is DASH? DASH, as Eric mentioned, stands for Developing Affordable Starter Homes. And it is a fund that provides loans or debt financing to Baltimore-based small developers, and I bet a lot of you are those, who do the very difficult but important work of acquiring and renovating single-family homes in the city to create naturally affordable homeownership opportunities. So the mission of DASH is really to help you do this type of work, which we think will result in positive race and wealth equity outcomes from increased neighborhood stabilization, minority homeownership, and job creation. DASH has many goals, but really, if you look at the slide, two very important goals to us is to support you, because you're the ones who are doing this very, very difficult but important work so that together we can increase homeownership in the city. DASH is a very special initiative to all of us because it's a public-private partnership that brings together different parties to make this all happen. So I think it's very important for all of you to hear directly from some of our very key partners. Most of you know DHCD, so we thank the DHCD team and the others who are with us today. So the first partner we'll hear from is the National Community Stabilization Trust, which is a national nonprofit headquartered in Washington, D.C. Next, we'll hear from Neighborhood Impact Investment Fund, which is a fund based in Baltimore City. And last but not least, we'll hear from our very important operating partner, Dominion Financial Services, which is also a Baltimore-based business. So without further ado, I am extremely proud and honored to introduce to you Julia Gordon, who is the president of NCST. Julia? Oh, I think you're on mute.
Muted. Thank you so much, Sharon. I want to thank Eric and all of DHCD, not just for holding this webinar today, but for your partnership and participation in the entire development process of the idea for this fund. Without your support and participation, we would not have gone forward. And so this is really a testament to the work and the creativity that is happening at your department, as well as your willingness to take a chance on what we think is an innovative model that we hope will provide a very useful product for many of you on this webinar today and many other folks as well. I, of course, want to thank the NIF Fund for your incredible partnership throughout. And I want to thank the other funders of NCST who are supporting this effort, the Rockefeller Foundation and the PNC Foundation, who have provided capital to NCST so that we can get this fund underway and moving along. I want to thank Dominion. I will tell you something about public-private partnerships, which is they're not always easy. You're working across a lot of different kinds of cultures. You know, in this partnership, we have government, nonprofit, and private lenders. And all of us come from very different backgrounds. And it's a testament to the friendship and trust that's built up around all the participants here that we are able to bring this opportunity to you today. And last but not least, I want to thank Sharon Park, because this is all her brainchild, and she has worked countless hours to make this happen, and is really one of the nation's leading thinkers right now when it comes to finance for single family work. And so I'm just very grateful to have her participating here. I did want to take 5 minutes to talk a little bit about who the National Community Stabilization Trust is, because I know we're not a household name and you may not have heard of us. We're an organization that was created in 2008 during the financial crisis to serve as a facilitator of matches between financial institutions that had REO properties and community-based developers that wanted to acquire and rehab those properties. We have been, since that time, we have facilitated the transfer of more than 27,000 properties nationally, including many in Baltimore. And we have many partners in Baltimore, including Dominion, that has been a partner for a long time. Over the years, in addition to our REO platform, we have delved into many other areas, but all aimed at strengthening neighborhood housing markets and increasing availability of affordable homes for families. And so we now engage in a number of policy efforts. We run something called the Homeownership Alliance, which brings together high-performing nonprofit developers to have a voice in Washington for both legislative and regulatory efforts that would enable developers to do more work on the single-family side, to increase opportunities for homeownership and for closing that racial homeownership gap. We have also spearheaded the Neighborhood Homes Coalition, which, keep your fingers crossed, in the Build Back Better bill that's before Congress right now, we have successfully advocated to put in that bill a brand new tax credit program for single family development for the purpose of homeownership, where the tax credit would fill the gap between the cost of acquisition and rehab and what the home would sell for if the cost of the rehab exceeds what you can sell that home for. It's actually available not just for rehab, but also for new construction, and is further available for existing homeowners as part of a project. If that passes Congress, it will be something that is allocated out through the state housing agencies. And that is, you know, how anybody who is interested in participating in that program would get connected. In addition to our policy advocacy work, we also have several community development initiatives. One, of course, is DASH, which we have sponsored from the, as soon as Sharon convinced us that we wanted to do this. We also spearhead a project that we call Middle Neighborhoods. There are several folks from Baltimore heavily engaged in that project, which is looking at neighborhoods that are not areas of persistent poverty necessarily, but that are not gentrifying areas or might not be thriving as much as we think they should. And we believe that often policy and policymakers ignore those neighborhoods. They're sort of the neither fish nor fowl neighborhoods where there may not be an emergency, but where we know that continued both public and private investment can help those neighborhoods continue to thrive rather than potentially getting into a situation, whether because of COVID or any other kind of economic pressures, where those neighborhoods go into decline. And of course, a very big part of that work revolves around increasing homeownership in those neighborhoods, sustainable and affordable homeownership. So I'm going to stop there and turn it back over to Sharon and look forward to your questions later.
Thank you so much, Julia, and thank you for those extremely kind words. So next, I'm really pleased to introduce to you Mark Hoffman, who is the Chief Executive Officer of the Neighborhood Impact Investment Fund, or lovingly known as NIF. So Mark. Did we lose him?
Thanks, Sharon. I'll be brief. It's a pleasure to be here today on behalf of NIF. For those of you who don't know us, the fund was created 3 years ago by the city to support investment in Baltimore City neighborhoods. We're an independent organization. We're a 501c3, but we work in alignment with the city. We have a board of 14 community members. 3 of them are city representatives, including a representative from DHCD. So we try to work as close as possible to meet the objectives of the city. Probably most simply and most importantly, we're a 100% place-based fund. We're focused on investing in a map. It's the map on the right of the page you're looking at. All of our funds are to be deployed in these areas. They're about 65% of the city. Geographically, it won't be any surprise to the folks on this phone. It's basically the black butterfly communities that have been suffered from disinvestment and segregation for most of my whole life as a Baltimorean. And so we are exclusively focused on channeling investment into those areas. It's essentially everything to the west of MLK, east of 83, and not along the waterfront. And this served the city, when we started, lent us $50 million. That serves as our lending capital. We've committed almost half of that to date, although some of it's coming back. And you can see on the map the locations of some of the larger projects we've invested in. They're all around east and west side of the city. The dots represent large scale investments we've made. These are in projects. Our investments in these projects are sort of 500,000 to 2.5 million order of magnitude. And these are large deals that you'll see around the city, things like the renovation of the Odell's building on North Avenue, which is about to reopen with Code in the Schools and Young Audiences as their tenants. Groundwork Kitchen, the workforce development project that Paul's Place has built and is leading in Pigtown, that's now open. And then most recently, the zero energy housing project that was just launched on North Avenue at Pennsylvania. So again, these are large scale project loans, kind of 500 to 3 million, where we can get projects accelerated or be catalytic. At the same time, we recognize that in the communities we're trying to serve and the neighborhoods we're trying to serve, there are other needs that on a place basis that we're, as a small organization with capital, are not well positioned to serve. And so we've devoted about 1/3 of our efforts and 1/3 of our capital to partnering with other people who can meet needs that we can't address effectively on our own, or we don't think we can. So small business lending, for example, we're a large lender to Baltimore Community Lending in support of their business lending effort. We funded a partnership called Arcturus, which does larger scale business loans in the city. They've committed $25 million to the NIF neighborhoods, have closed 3 loans for about 12 million. We gave money to Opportunity Fund, a national small business CDFI, to come in and do small PPP loans. So they did a couple dozen PPP loans that were kind of 20,000 or less that were struggling to get done. All sort of small transactions where we have capital, but we don't have a lot of staff model is not well suited to address. And that's the same strategy we've tried to employ here with Dash. We recognize the importance of small scale single family development, particularly in a row house city like Baltimore. And we also recognize the difficulty of executing efficiently and providing capital efficiently to people on this phone who can't wait around for 6 months in order to make that to happen. So we are thrilled to partner with NCST and particularly Dominion on the execution side. We're providing the preponderance of the capital here, and look forward to trying to build this fund up over time to meet the needs of small developers. So thanks, Sharon.
Thank you so much, Mark. Very, very helpful background. Last but not least, I'm also very pleased and lucky to introduce to you Jack Bevier, a partner from Dominion Financial Services, who is the operating partner for Dash. Jack?
Hey guys, thank you for having me on. I gotta say, Dominion could not be more excited to be part of this program. And it's been a fantastic experience working with everyone involved here. And we're really excited to be able to do something that contributes our operational expertise to making Baltimore a better place, which is the city that we live in, that we love, where all of our employees are. So for those not familiar with the company, my name is Jack Bevier. My partner, Fred Lewis, started the company in 2002. I came in 2007, and we are a Baltimore-based company. Our lending company is headquartered at 32 South Street in downtown Baltimore. We also have a property development company where we buy, renovate, and either rent or sell houses in Baltimore all over the city, in all of these neighborhoods. And so we're intimately familiar with the city and have been operating here since 2002. We've got 75 employees in the lending company, with 60 of them who come to work every day in Baltimore City down at South Street. And so we are local operators. And so when I got to had the opportunity to meet Sharon 2 years ago, we were talking about what were the unmet needs in the city from our perspective. And one of the things that we brought up and started brainstorming on were that the vast majority of the development activity in Baltimore City, in terms of the impact in middle neighborhoods, and particularly the Black Butterfly, are single family, mostly row houses, some single family detached, but a lot of row houses development. And it's one at a time, small developer activity that in and of itself doesn't make the Baltimore Business Journal or Daily Record or Baltimore Sun, but in an aggregate has tremendous impact on the lives of Baltimore citizens and the progress that the city makes. And so that is kind of our core business, both operating that kind of real estate as well as lending on it. And so when we were able to put these ideas together to be able to be involved in what became the Dash Fund, we just couldn't be more excited to be involved. So one of the realities, and one of the reasons that we've been brought in as an operating partner here, the realities of scattered site single family development are relatively quick closing timeframes and relatively low dollar amounts. We were working in affordable neighborhoods where if the brain damage and the time frame of getting a loan closed are too high, it kills the deal. And so what we've tried to do in our core business is take as much friction out of that process as absolutely possible. So kind of some features of the Dash program, which we were able to bring in, are that we do our underwriting internally. We're a Baltimore-based lender and developer, and so we know Baltimore on a block-by-block basis, and our internal underwriters are able to do valuations so that we don't have to wait for an appraisal, and we don't have a Carroll County appraiser coming in and throwing a dart at the board and trying to figure out what the values are in Baltimore City blocks, which is a reality of doing real small-scale development in Baltimore City. And so we're able to bring that internal valuation knowledge to get you guys quick feedback on your projects, and most importantly, quick turnaround times in terms of closing. If you've got 30 days, we know that if you've got 30 days to close on a row house, that's a long time. And so you need certainty of execution and quick feedback in order to make business decisions about buying row houses and single family houses in the city, renovating them, and then putting them onto the property tax rolls, and also getting a new homeowner into our city's neighborhoods. So we are really high, our focus is on speed and service, which is what we see as a core need for Baltimore City's small developers. And we're very excited to bring that to the table to Dash, and hope that you guys will see that as reducing some barriers that may have existed previously. One thing I'll also mention is that we're long-term invested in Baltimore City's success, which is one of the most important reasons that we're so excited to be part of the program here. We own properties in the city. We continue to buy, renovate, and sell to homeowners in the city ourselves. And we live here. So we are excited that we think that Dash is going to be a catalytic program to improve access to capital for small developers who may not have had it previously, and ultimately make the city better. So again, really thank you to all the operating partners, capital partners, DHCD. Everyone has been fantastic to work with, and we couldn't be more excited to bring Dominion's platform to Dash's success. I'll hand it back to you, Sharon. Thank you, guys.
Great. Thank you so much, Jack. And again, thank you to all the partners. Without you, this would not be possible. So we're going to now turn, it's a perfect segue into the next part of our presentation, kind of the guts of what I think we're all here for, which is getting started. So if you're interested in applying for the program, applying for the loan, we really want to go through practical information of how to get started. So we're so lucky to have Dominion as our operating partner, but we're also really lucky to have Will Hayes, who's one of Jack's top guys, as the main point of contact in terms of getting started. So Will's going to go through some of the program details, very high level. Again, if there are any questions, contact information he'll go through, and feel free to reach out. We'll come back to you right away. So Will, I'll turn it over to you.
Thank you for the kind words, Sharon. And hello, everyone. My name is Will Hayes, and I am so glad to be here today. I've worked at Dominion for about 13 plus years. When Jack told me about the Dash program and gave me the opportunity to work on it, I jumped on it right away and very excited to do so. I've lived in Baltimore City since 2007. I call West Baltimore home. I'm also a landlord as well. The Dash program is really special in terms of the way it's structured. And it's also a very specific mission to create home ownership opportunities in the city. So again, I'm extremely glad to be a part of this effort. So to get into the program, the best source of information on the program is at the Dash website, which is at www.dashfund.org. I'm going to cover some of the key points, but I encourage you to check on the website and the flyer that's posted there as well. To me, the easiest way to think about this loan program is that it's for acquisition and construction of an existing 1 to 4 unit property or home. At the moment, Dash does not lend for new or ground up construction. The property must be located in a NIF eligible neighborhood. This is around 65% of Baltimore City, as we discussed. If you look at the map on the slide, it is the areas that are in the yellow and dark yellow. You can also use a tool on this website to see if a property meets this criteria. The web address where you can search is listed, but it is www.baltimorenif.org/neighborhoods. Because the mission of Dash is to create affordable homeownership opportunities, you will have to pledge to sell the home to a homeowner for no more than $250,000. So sometimes there could be limited exceptions to that rule. The program is not to create a rental property or sell a property to an investor. You need to sell a house to an owner occupant. In terms of other key eligibility criteria, currently Dash is only lending to borrowers who reside in or have their business space in the Baltimore City market area. So Baltimore City, Baltimore County, Harford County, Anne Arundel the surrounding area. I'm sure Howard as well. If you have a business with an address there or residence there, that should satisfy the residency requirement. You also have to have experience for this program. Dash is not lending to novice investors. We want to generally see that you've had involvement in at least 3 projects over the last 3 years. As for the loan terms, the loan is 7% interest only. So you will make monthly interest only payments. And it's 3 points origination. But the 3 points origination are deferred to the back end of the loan. So you won't pay those 3 points until you go to sell the property to the owner occupant. We will fund up to 100% of the purchase and 100% of rehab, not to exceed 65% of the after repair value. The application process is pretty straightforward. If you're interested in applying, send an email to info@dashfund.org, and we will send you an application package. This will include a memorandum of understanding that indicates that you agree to the program's general guidelines, a personal financial statement that you need to fill out and return, as well as an application authorization form so we can do a background and credit check. And if you have a project on the table, you can also feel free to send over the scope of work as well. Our goal here is to help you succeed. The application process will move very quickly. Once all the information is in, we generally get a decision from Dash's credit committee within a week. Dash does not require appraisers. Valuations are done internally. Once approved, Dash can generally fund a loan within a couple of weeks. Dash was created to be borrower and customer service focused and understands the need to keep your project moving. We've listed some helpful hints. As I mentioned earlier, you can find more details at www.dashfund.org. Also, please feel free to reach out to me by phone or email anytime. We're here to help you with all your success in your projects. I think at this time we can open up for any questions. Eric?
Thank you very much to Dash and all its partners. It sounds very exciting. We have some questions that have come in the chat, and my colleague Kelly Bacola will be facilitating the question and answer period. Kelly?
Sure, thanks, Eric. And again, if anybody has any additional questions, feel free to put them in the chat. We do have some time. So thank you for your questions to start with. So thanks. The first question is, how does a small developer participate in the REO program? This was asked at the beginning of the program.
I think if they're talking about NCST's REO program,
Yes.
I don't know, Julia, if you're still on the line.
I'm here. So NCST has eligibility requirements for our participants that you can find on our website, which is www.stabilizationtrust.org. I'll put that in the chat after this. NCST primarily works with nonprofit developers. However, we will, if you participate in the Dash program and become a borrower through the Dash Fund, we are going to have a way to include those folks in our inventory program.
Great, thanks. The second question is, how many properties does the developer have to be able to handle at a single time?
So we don't have a requirement in terms of that kind of capacity. We are able to make a loan to a developer, basically one house at a time. We do have a limit of the amount of loan to any one developer at the same time, because we want to make sure that we're able to reach as many of you as possible. So generally speaking, the maximum number of loans that we will make to any one developer at one time is 2. But in terms of the developer's capacity to do several deals at a time, that's really up to the expertise of the developer. So we do hope that, people don't bite off more than they can chew, so to say, but we don't have necessarily any type of capacity requirements of how many deals at one time a developer can do. We do have the minimum experience requirement, And we like to generally see 3 transactions, involvement in 3 transactions over the last 3 years.
Great. And that was pretty much one of the next questions. So we will check that off as being answered.
Okay.
So the question after that was, can you repeat the counties that are considered resident for the purposes of the businesses applying or the companies that are applying?
Sure. I just went back to post the helpful hint slide.
Oh,
So
fantastic.
Baltimore City market area would include the city, which is its own county, Baltimore County, Anne Arundel County, Howard County, Carroll County, Queens Anne County, and Hartford County.
Fantastic. Thank you very much. You could probably just leave this one up. That's probably a good
Yeah,
one.
sure. Yeah.
And then the next question is, are there any grants that will be available?
That's an excellent question. So for this first fund, this is our first inaugural fund, there is no hard subsidy or grant available from the fund itself. So to the extent your project does require subsidy, you would have to bring that subsidy with you. That being said, one of our longer term goals is really to be able to be in a position to help small developers with subsidy needs as well. Julie mentioned a very important piece of legislation, for example, that NCST is spearheading that we hope makes it into the Build Back Better legislation to address the value gap or appraisal gap where deals don't pencil out without some form of subsidy. But at this time, Dash itself does not provide, unfortunately, subsidy dollars, but we are hoping in the future that we'll be able to aggregate for small developers, sources of subsidy to help you. We understand how hard it is to find subsidy, so it's something that's on our to-do list, so to say.
Great. The next question is, and I'd like to offer a tidbit after I read the question, but it says, what are the financing options available for first-time homebuyers when developers sell to them? And I just wanted to mention that if you buy one of these homes that's been rehabbed from a vacant building, the city does offer a vacancy value booster grant that goes toward closing costs up to $10,000, I believe. So I just wanted to throw that out there. But if you have anything to add, please feel free.
Yeah, so this is where I'm going to give a plug to Live Baltimore. So I think it's livebaltimore.org. That is a nonprofit organization based in Baltimore City, the sole mission of which is to increase homeownership in Baltimore City. So that has a lot of very helpful information on the homeownership side, on the kind of the consumer down payment assistance and mortgageability. So I would highly encourage people who are interested on that side of the equation to go to Live Baltimore's website, where you can find a lot of information that's really relevant to Baltimore City.
Great, thank you. The next question is, there's a gentleman who's said that he works for a nonprofit that assists homeless veterans. And is there a way that they're eligible to apply?
So in terms of the applicant tax status, we welcome applications from nonprofit borrowers. One thing to keep in mind, as Will mentioned, is at this time, this program is really to create homeownership opportunities. So the borrower developer will have to pledge to sell the home at the end of the project. So if you're looking to create affordable rental housing, this program is probably not the best fit. But if you're looking to create homes to sell to veterans, then this would be something that might fit your needs. And we welcome applications from nonprofit organizations as borrowers as well.
Fantastic. The next question is a down payment required for the loan?
So as Will had mentioned, the best way to think about that question is Dash will provide a loan up to 100% of LTC, which is acquisition and renovation costs, but it will be limited by 65% of loan to after repair or as renovated value. So said differently, if you can find a really good deal where basically 65% of your as renovated value covers your acquisition and renovation costs, you could finance basically 100% of those costs. Keep in mind, you do have to have some money on hand for working capital to get the repairs and construction done, to then be basically funded back to you through a draw of your construction loan. So that's something that is going to depend on every deal and the terms of every deal in terms of whether you need to bring money to the table or not. So that's the way we suggest that you think about it. And Will has so much experience in this business. He's happy to answer any questions specifically with specific transactions.
Okay, great. And we did just answer that yes, nonprofits can participate in the DASH programs. Just wanted to reiterate that. Next question is, why is new construction in designated areas not allowed?
So again, this is our first fund, our inaugural fund. So we decided to start with existing structures and renovation and rehabilitation of those. People who are from Baltimore City knows there are plenty of those in the city that need help. So that's not to say in the future we may not provide new construction or ground up construction financing, but at this time it's really for the renovation of existing structures.
Okay, I'm writing that one down for myself. Okay, the next question is, do the previous 3 construction projects have to be in this territory, or can they be from other areas? For example, Virginia.
Yeah, so we prefer that your experience be in the market because, as many of you who are in real estate know, it's, as they say, local, 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 location, location, location. So depending upon where, I think in Virginia, but again, we're really looking to work with borrowers. So it's kind of on a case by case with respect to the experience. But the short answer is we don't have a necessarily hard requirement that it be in the NIF footprint, but we do want the experience to be in the market with similar typology in terms of the real estate and so on.
Okay, great. And also, I did mean to ask this, will the slides be made available to the attendees if requested?
Sure, I think we can send around the slides. I think this is also being recorded, so
Yes.
I think we can also circulate the YouTube link for DHCD's channel on the Baltimore Builds webinar series, which I think I would encourage everyone to listen to the other webinars. I've listened to most of them and they're very terrific as well.
Great. Yes, thank you. Thank you for the okay, there is a question that was out of I'm not totally sure the context. So if you aren't, I'll ask the person to clarify, but they said, you said NCST would quote unquote have a way to participate in the program. What does that mean?
So
sure.
Anybody who borrows successfully from the DASH fund, we will be enabling you to access inventory that comes through NCST's REO Match portal.
Great. That's great information. Thank you. Do you have so I guess this kind of answers that, but it says, do you have the properties that you want developers to purchase and rehab?
So that I think really ties into potential inventory, say from NCST, but we don't have kind of stock inventory of properties. So a developer would have to source the asset themselves for the project. One thing we are also working on, similar to kind of looking out into the future, is trying to work more hand in glove with organizations like One House at a Time, also hopefully DHCD, so that there could be a little more orchestration of if there are properties that kind of fit, DASH could provide the financing and the asset could be sourced, from one of these places. But at this time, we don't have properties ourselves or a list of properties that we're looking specifically for you all to renovate and place into homeownership pool.
Gotcha. Okay, I'm going to ask a few questions. I'm just going to ask 3 questions in a row regarding the loan, some loan questions. And they are, what is the interest rate? on the fund, what is the LTV or loan to value ratio? And then if the comps are over 250, are you allowed to sell for over 250?
Sure. So in terms of the interest rate on the loan, it's 7%. There's a 3% financing fee, which typically with most private lenders, for example, that's paid up front. In our loan product, that's paid on the back end. So you could basically pay that 3% financing fee when you sell the house that would come out of the proceeds of the sale of the home. In terms of the concept of LTV, it stands for loan to value, and the value is the as renovated or after repair value. So what that means is if, let's say, your as repaired value of your house is $200,000, the capped loan amount, that you would basically have, if it's 65% of that, is $130,000. So the 65% is of loan to value, means that is the percentage that your loan divided by the as renovated value can't exceed. In terms of the question about the cap of $250,000, because this program is specifically geared towards creating affordable homeownership opportunities, that is a number that we think is right around the ballpark from affordability standpoint. However, we recognize, as most on this call do, that median home prices have really, kind of soared. So to the extent that there is something that someone wants to sell for slightly over that, we can approve on an exception basis. But we're really targeting the 250,000 as a cap because we want to make sure that these houses are affordable. And affordability is a whole different conversation that Julia is the country's preeminent expert on. But we don't have enough time on this webinar, but that's really the rhyme and reason if you think about it that way.
Sure. Okay, thanks. The next question is, if you've recently acquired a property and are interested in funding the project through Dash, would that project qualify? Reimburse for acquisition and fund renovations?
Yeah, so if you actually already have a property, you can apply to Dash for, basically funding, just like you would to another private lender. So you can have your property already in hand and apply for, funding from Dash.
Great. The next question is, are all Dash funds private funds?
So Dash is funded, the capital partners of Dash are the City of Baltimore, so DHCD, as well as NIF. So it is really private, and we do also have an NCST, and we also have another private investor. So it is really a private public fund in that regard. So it's not all private capital, it's a mix.
Great. What process do you have for the renovation draw process? Is it the same as a normal lender? Yeah,
so I don't know if Jack or Will would like to address that one, but the short answer is it's the same process as it would be for a private lender or even a bank lender, where there is you do the work and the draw is on a look back basis, so to say, after the work's been, quote unquote inspected, and your draw has been approved. But I don't know, Jack, if you want to, or Will, you want to add any more to that?
Sure. So the draw process for work is normal. You would just basically email over the draw request. Draws are $150 each, and we would send the vendor out to the property to take pictures. After review those photos, those funds will be released.
Okay, great. And I'll just answer. The developer can be a corporation, an individual, a nonprofit. Any of those groups can apply. And I will also mention from thank you, Susan Moriarty, city employee. She mentioned also CDBG has rehab admin funds may be available to Dash participants also, and she has that contact person in the chat. The next question is, do you have to show working capital, and if so, how much?
Yes, so if you look on the slide, the helpful hint slide, the last bullet point, we do require that you show at least $5,000 plus 20% of whatever your committed construction loan amount is. So that is basically the liquidity or kind of working capital requirement that we'd like to see.
The idea there is that you're going to be able to closing costs are minimized by putting the loan fee on the back end. So closing costs should be much less than typical. But the 20% of the committed construction loan amount, the idea there is that you're getting the rehab started, we're doing a draw and then reimbursing you for work performed. So, we don't want to do draws of, $2,000 30 times, over the course of 30 weeks. So the idea is, 4 to 6 draws we would expect to be pretty typical. So we pegged the liquidity requirement at 20% of the renovation budget. So if you're doing a $50,000 renovation, we'd expect that you got $5,000 for closing costs plus another $10,000 in order to get the rehab started. And we'll be reimbursing you that operating capital as you go, so you can recycle that operating capital and get to the finish line.
Great, thank you. The next question is there a minimum amount of housing Dash is trying to complete yearly?
So we definitely have goals in terms of, what we're hoping to accomplish, but there isn't necessarily a hard requirement for that. When you think about the fund and basically the capital, we're trying to get as many houses done as possible, but it will also determine on how long someone has a loan out when we get the money back, and then we can relend it as well. So we don't have necessarily a hard target, but not to, be cute about it, but we really do want to try to do as many houses as humanly possible.
Great, we love to hear it. The next question is there a follow-up mortgage program available for prospective homeowners? Many prospective homeowners that I try to sell to have low credit scores, but are regularly able to afford a $1,200 a month rent payment.
Yeah, I would, again, look at Live Baltimore, which on their website, they have a lot of resources related to homeownership, including opportunities for grant and other forms of assistance.
Yeah, and I would also recommend that our Department of Homeownership, the Baltimore City DHCD Department of Homeownership or Office of Homeownership, they have a lot of great resources for people trying to get qualified for a mortgage.
And I'll further add that although Dash itself is not going to be doing any kind of direct mortgage lending to homeowners, what we do hope over time with this fund is to also add some value by helping connect borrowers of this fund with programs that are helping to get, maybe first-time home buyers, first-generation home buyers into the market.
The next question is, what qualifies as an owner occupant for sale of the property?
So really think about it as a homeowner that's going to live there as a primary residence. So in effect, what the program's not for is to either create a rental or to sell to an investor. It's really from a mission orientation perspective, this program, we're really trying to promote homeownership because we think homeownership has all kinds of positive impacts, including financial stability, household stability. So think about it as selling it to someone who's going to live there as their primary residence.
Right, and most mortgage channels will have a definition of owner occupant for the purpose of their mortgage program. So you would need to go with whatever the definition is from the mortgage lender that's involved.
Yep, and I believe Maryland has a form that you also need to sign as well, stating that you'll be a homeowner for tax credit purposes in the state. The next question is the fund only available for single-family detached and row homes, or is the fund open to a rehab of a larger building that would be a multifamily condominium?
So the fund is really for single family. It can be attached in terms of a townhome or a row home, but it's a really, from, not to get too nerdy about it, but fee simple as opposed to condominium ownership, at least at this time. So again, I just want to remind the audience, this is an inaugural fund. We have great hopes for the future, but for this first fund, that's what we're focused on.
Great. The next question is, will you have in-person events eventually in the future so that small developers could possibly partner with other small developers?
Yes, we hope to do that hopefully in the future, but I'm going to give a shameless plug for the Small Developers Collective and pass it over to Jack to talk about that, because I think that's a wonderful forum for small developers to get to know each other in the city.
Thanks, Sharon. So yeah, one of my extracurricular activities is I'm on the board of the Small Developers Collective, which is a nonprofit trade organization for small developers doing work in Baltimore City. So if I would expect that a lot of you might be interested in that organization. If you want to sign up, it is free to join and join our listserv at smalldeveloperscollective.org. I'll throw that website into the chat. It's free to join, and we have usually events every 60 days, just kind of networking events with other small developers. They're fantastic opportunities to meet other folks who are doing work in the city. And we also have kind of educational events, both webinars like this format, as well as some in-person meetings with just relevant topics for Baltimore City developers. As a matter of fact, today at 5 o'clock, we've got Alice Kennedy doing a presentation in connection. We joined with Maryland Multi-Housing Association to have her kind of give us a brief on her vision for Baltimore City Housing, DHCD, over the course of the next year. So there's information on checking out that event today at 5 o'clock at also www.smalldeveloperscollective.org. And if you sign up there, again, it's free, and you'll get maybe an email from us once every 30 to 60 days about events that you guys might find interesting. So thanks for that shout out, Sharon. Very much appreciated.
Sure.
Great, thanks. The next question is, who determines the quote unquote as renovated value?
So valuations are done internally by the Dominion team. So there's no third party appraisal. It's an internal valuation. And I don't know, Jack, if you want to make any comment.
We have an internal underwriting team. Everybody's Baltimore based and got experience doing real estate in Baltimore. We find that we have, frankly, just more accurate, less controversy when we're talking developer to developer about what the after repair value and what the appropriate scope of work is. And it's also a lot faster as well. So you're not going to order an appraisal and then we wait 4 to 5 weeks and then you come back and you don't like the number and the appraiser won't pick up your call. We're going to give you our assessment. You're going to speak to the underwriter directly. We're going to give you our assessment of your project. And, we find that 90% of the time we're speaking the same language. If there is ever a disconnect, it's nice to just talk it out. Maybe we're missing something, maybe you're missing something, but we find that that's a healthy process to come up with an accurate after repair value.
The next question is, and Jack, you might want to stay on for this because it's another loan question, but the question is, are the loans non-recourse? I'm not sure what that means.
Yeah, so we do require a personal guarantee, just as most lenders do. So the loans are not non-recourse in the sense of you will have to also provide a personal guarantee for the loan.
The next question is, are you aware of any organizations who provide funds for commercial properties?
So I think Susan put a comment in the chat about checking with Baltimore Development Corporation. I do think that, and Jack can take this, I do think there are private lenders, probably including Dominion, that may provide financing for commercial properties, if you mean by that small multifamily, as well as credit unions and other traditional banks.
Okay.
Hey, Kelly, can I just jump in real quick?
Of course, yes.
Sharon, regarding nonprofits, potential nonprofit borrowers who may not have a guarantor, you want to talk about that distinction?
Yeah, right. So nonprofit borrowers would not be required to post a personal guarantee because the nature of the organization is nonprofit and technically not quote unquote owned by anyone. So there is a distinction. Thank you, Jack, for nonprofit borrowers. And so I think there
Okay.
was another question in the chat about LLCs and personal guarantees. So yes, if the borrower is an LLC, the kind of principals or owners behind the LLC would have to also post a personal guarantee.
Okay, thank you for the clarification.
Mhm.
The next question is there a maximum limit of awardees or limited funds available, and is there an application deadline?
So there is a limit per borrower of a maximum of around 300,000, which is probably 2 loans at one time. There's no application deadline per se. We accept applications on a rolling basis. The fund, is of a limited size. However, thanks to our capital partners, we're very confident that, as we continue to grow, we'll be able to get more capital to be able to satisfy, borrower needs. But there is a per borrower limit at one time of, in effect, I would say 2 loans.
Great. And then someone did direct message me and ask if you could go to the following slide after this one and post
Sure.
that. Okay, the next question is, did you hear me?
Nope.
Sorry.
No.
No,
Cut out.
Kelly, you're breaking up.
so I think the next question is, does the loan require the renovation to be completed within a certain amount of time?
So the loan term, initial term is maximum of 1 year. There are situations where you can request an extension. So there isn't necessarily, other than the term of the loan being a year, the hard requirement. I do think most people want to complete their projects as quickly as possible since you are paying interest on the loan. But I would think about it in terms of the loan term when you have to repay it being, within a year.
I just got a text from Kelly. Her internet went out
Oh boy.
and everybody on the video went away. So I'll see if I can pick up where she left off.
Okay.
Question, did you say $850 per draw and assume 4 to 6 draws per project?
I think Jack clarified in the chat, it was 150 per draw. So I think Jack clarified that.
Okay. How in detail does the 3 rehabs of past experience have to be in order to qualify?
Jack, do you want to try to address that one?
Yeah, sorry, could you repeat that again?
How in detail do the 3 rehabs for past experience need to be?
Oh. Yeah, so we're just looking that this isn't your first project, just because the learning curve is really steep on, I would say your first and your second project. We find that folks who've got, active participation in at least 3 deals previously, whether that's as a partner in those deals or even as the general contractor, that's somebody we'd really like to help in this situation are folks who are actually swinging the hammers and doing the work. And may find their deals, but may not qualify for, typical bank financing. That's definitely somebody we think would be a good fit for this program. But just active participation in the deals, frankly, it's going to be a little bit subjective. I would say, if you're not quite sure, just give Will a call and talk it out, and he'll make his best case to the loan committee to that you've got, enough experience that you're going to be able to get through it comfortably. We just don't want to be in a situation where somebody's still kind of going through their paces and it's their first time going through. We're looking for successful outcomes, homeownership outcomes. And so we really want to make sure that the product that's being produced is a quality one, because these are all homeownership outcomes here. So we're not taking that responsibility lightly.
Great, thank you. Does the condition of the property have an impact on loan approval?
Jack, do you want to take that one too?
No, it really doesn't. As long as the renovation budget is adequate to bring the property up to, use and occupancy standard, we would frankly, we're looking for this to be able to be a tool that will be able to renovate vacant properties in the city. So whether a property needs 20 grand or it needs 120 grand, it'll be a good fit for this program.
And Jack, this one is probably for you. Someone is asking, how can we sign up to hear Commissioner Kennedy this afternoon?
Yeah, so if you go to that www.smalldeveloperscollective.org website, there is a registration link there. The event is tonight at Terra Cafe at 101 East 25th Street from 5 to 7 p.m. It's preferred if you register beforehand, but if you're not in a position to be able to do that, you can show up at the door. It's $35 for admission. It's kind of it's our fundraising effort basically for the Small Developers Collective, and that includes some light food and 1 drink ticket as well. Thanks, guys.
So is it being streamed or is it only in person only?
It's in person only.
So the next question is, what's the time period allowed from start to completion for a project?
So again, I think the best way to think about it is the loan term is 1 year, 12 months. So the idea is that you need to repay the loan in 12 months. There are some exceptions for extension requests, but generally speaking, you should be thinking about it in that time frame.
And William, I think this one is for you. What's the application decision turnaround time? And you did have a listing of that.
I would say if you say about a week. I'd say 5 to 7 business days is a good conservative estimate of the turnaround time. It also depends on what day of the week that the credit committee is meeting. It also has an impact on it as well.
The next question, and I think Jack was alluding to this, can you use the partner's past performance if they're a licensed contractor?
I think absolutely. We're preferring 3 projects in the past 3 years. But again, I would say, if you're worried about that, but you feel confident that you can get through the scope of the renovation project that you've got in mind here, make the case to Will, and he'll bring it to loan committee for us.
And I think that probably answers this next question. Would 1 deal plus GC experience meet the requirement in lieu of 3 deals?
Yeah, I think so. The general contracting experience, I mean, that's the guy doing the work, right? So that's what we're looking for. We're looking for your ability to execute and get through the deal. And certainly contracting experience is critical for the kind of renovations that we see in old Baltimore row houses. So we love that we love that profile.
The next question, as a general contractor, how can we apply for renovation?
So you would apply just as a borrower. If you mean, how do you apply for a loan? You just really go through the application process. We don't, again, if you're a general contractor, as Jack mentioned, I think it's great. But, Will is available to help walk through that process, answer any questions. But, we encourage general contractors to apply.
Okay. Thank you. Is there a cushion? I'm not sure I understand this question. Is there a cushion for nearby area developers who want to start in Baltimore? For example, Prince George's County in DC.
If the question is if you're in Prince George's County or DC, but you want to work in Baltimore, we do have a Baltimore City market area residency requirement at this time, which is on the slide. The reason for that is, as we mentioned earlier, the fund is capitalized by public and private capital that is focused and based in Baltimore. So at this juncture for this inaugural fund, again, we do have that residency requirement. So unfortunately, if you're in PG County or DC, you likely wouldn't meet the residency requirement.
There was a link provided to one of the websites. The question is, where are the opportunity locations? How can we find out about these properties?
Yes, and I think we may have might be my fault, have a typo on the link, but I think it's BaltimoreNIF.org/eligible neighborhoods. I know Mark Hoffman put it in the chat. If you go to NIF's
Yeah,
website.
if you, yeah, Sharon, if you just go to our website, www.baltimorenif.org, just spelled out, there's like 4 headings across the top. One of them is eligibility. Click on it, it'll pop up.
And you can search by actual property address
Yeah.
to figure out if an actual address is in NIF's footprint.
Thank you. Next question. If we complete and sell in 4 to 6 months, is that still okay? Or are there any penalties for early payoff?
No, there are no prepayment penalties, and we would love it because the faster you can do good quality renovation, rehabilitation, again, good quality, and faster we recycle that money, we can extend more financing to more people and get more homes done. So that would be terrific. And there's no prepayment penalty for that.
Okay. Next question. Is it possible to get a loan approval letter before we find a property to renovate?
So this is a little bit of a tricky question, and my recommendation would be to reach out to Will to discuss. We are able to provide kind of comfort or support, a letter of support, but this is one of the details we haven't quite honestly worked out all the details for. So this one I would request that Mr. Rabah reach out to -info-fund.org, and we can talk about the specific situation that you might be asking about.
Okay. And we're going to have about 5 more minutes. Hold on one second. Can we use the same loan to flip 2 different properties as long as we pay it back within a year?
Yeah, so that's really difficult because the loan proceeds are specific to the project. So the loan is really intended for the specific property that you submit for the loan to acquire and renovate it. It's not a kind of general unsecured, so to say, loan. It's specific to your project. So the short answer would be no. We would encourage you to apply for the second loan for the second property. The loan is secured by the property itself, and the use of proceeds really is to be used for the property that you submit for that specific loan.
So I'm going to open up the last 5 minutes. There's some people who raised their hands and wanted to ask a verbal question. If they still want to ask that, I'm going to give you the opportunity. I see an Oslin Cummings.
Hi, good afternoon. Can you hear me?
Yes.
Yes, so I have a quick question. So my husband and I own 2 rental properties in Baltimore City. He's also a contractor, but he is not the main contractor. So I'm just wondering, as far as qualifying the 3 projects, I think that you need to qualify. Would that suffice, or how? I'm just trying to figure out how we can qualify with our past experience. We currently live in Howard County, but we own 2 properties in Baltimore City.
So my recommendation really would be to maybe contact, send an email to -info@fund.org, and we'll reach out to you and your husband to talk about your specifics. Because I think it's really a fact specific question, what your involvement was in the rental properties, so on and so forth. But I wouldn't, in other words, it's not going to preclude you. I just think it's better maybe if we have a conversation to get more information to help you.
Perfect. Yes, I got Will's information, so I'll reach out. Thank you so much.
Yeah, thank you.
Okay. Are there any other questions for our great panel and great information they provided? Let me see. I think we're done in the chat.
There were a couple more in the chat after we stopped before.
Okay.
I think Jack has answered one of them in the chat.
Yeah, Mark, sorry to trouble you, but would you mind just posting the link to the address lookup that I think you posted? And then I think someone asked for the Live Baltimore website, which I have my presentation up. I don't know if someone might be able to grab that.
If you just type in, if you Google Live Baltimore, it'll come up, the link will come up. Or whoever else.
Could I address, Susan put a great question that I'd like to address. Are there any measures to ensure quality? Does all this fall to the code inspectors? It's a fantastic question. So again, given the fact that the outcomes here are going to be for homeownership, we take that responsibility very seriously. All of the projects are going to require full permits. This is a DHCD program. All the work that requires a permit must have the appropriate permits. Our inspectors are going to be taking a look at the work, and they've got a lot of experience looking at Baltimore City renovations. So they're going to be acting as quality control inspectors as well as the stewards of Dash's capital. And in addition, to the extent that the work requires permits and inspections, we're going to be asking for those inspection results as well. So, if you do a plumbing rough-in, we're going to be looking for the sticker before we release money for the plumbing rough-in. So yeah, I just want to be fully upfront about that.
Okay, great. Well, look, I cannot thank this panel enough for the great information that was provided. I want to especially thank also those from the city who participated in answering questions and providing information for sources of funding for commercial properties. This is some great information that I believe will propel Baltimore City in the next decade to fixing the problem of blight that we have in this city. And so excited about it, being an employee of Department of Housing and Community Development. I'm looking forward to what we have in the future. But I especially want to thank all the participants who stayed on this call. We had about 175 people who participated in this call, which is a record for one of our webinars. So thank you very much, panel. Thank you for the information that you gave. Thank you, all of the participants. Please look forward to our webinars for 2022. We are going to be putting together a whole slate of informational pieces that we feel will make this city a high quality city to live in. Thank you very much and have a great holiday season.
Thank you.